Kyle Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, Security Token fans, and thanks for tuning into this week's episode of the Security Token Show. We're coming to you, as always, from our studio in sunny Miami, Florida. I'm your host, Herwig Konings, and I'm joined by my co-host and business partner, Kyle Sonlin.
Hey, everyone. Welcome back.
And before we get started, I do want to share a quick word from our sponsor, as always. This episode of the Security Token Show is brought to you by Relio. Relio is a security token issuance platform focused on disrupting capital markets by tokenizing real estate, equities, and venture capital using blockchain technology. The firm successfully closed its $4 million security token sale, which powers the RST security token, which is now trading on Uniswap. Relio is also working with top-tier clients, including a multi-$100 million fund and prominent real estate property in New York City. The firm's cross-chain mainnet launch is set to go live next quarter, and with its new funding round complete, Relio is poised to take advantage of the explosive potential of the security token industry moving forward. So, if you're interested in learning more about Relio's technology or the platform, check out relio.fund to learn more.
Thank you so much to Relio for being a great sponsor of yet another episode. And welcome back to all of our returning watchers or listeners, depending on wherever you're checking out the show today. And to all of our new listeners, just a quick breakdown of what the show we tend to run through. We start with our companies of the week. This is the two biggest companies Herwig and I get to choose to really highlight the biggest moves in the industry. From there, we move into our top 5 segment. These are the 5 headlines you didn't want to miss over the week, and you need to check those out. From there, Herwig's going to take us away and show us the biggest industry news from institutions. What's the regulatory changes? What are the biggest banks doing? Where are we really, where's that whale money going and what's it moving into? And then finally, I'm going to cover the STOS segment, talking about the fundraising news, new security token offerings, market trading, all that good stuff, before we close it out with our main topic this week, blockchain-powered securitization.
An exciting topic. I'm excited to get into it, Kyle. Another great episode. Lots of news, lots of security token updates. But of course, as you said, can't get started with first doing the company of the week for episode 94. Who do you have, Kyle?
Episode 94. Excited to be doing this almost 2 years now. And my company of the week this week is Paxos. And if you've heard of Paxos before, that's because they're a blockchain-based settlement platform. And they like to work with institutions all around the world to help them optimize the settlement and clearing process. And what I mean by settlement and clearing process is the actual time that it gets recorded from when you make a sale of a stock or a bond or anything, and when it actually gets recorded to the ledger, when everybody decides that, okay, yes, this new owner is the person that purchased those things. And why are they in the company of the week this week? Well, because they decided to come out with their newest partnership, their newest announcement with Bank of America, the 3rd largest bank in the entire world. And now they are going to be providing blockchain-based settlement for Bank of America's securities. This is huge news, and Kevin McCarthy, the head of financing and clearing at Bank of America, said that blockchain offers a more flexible and speedier settlement system, that they've been working internally with Paxos for the last 6 to 12 months to figure out how they can make this work, and they've officially decided that they have come to the conclusion that they can bring the settlement time to T+0, and they can free up all of the collateral required for an overnight basis, as well as improving the return on assets for all of their trades. They're going to be going fully live with blockchain-based settlement for their assets. This is a huge deal, and I'm so excited to award Paxos my company of the week.
That's a no-brainer. That's a huge accomplishment. Huge congratulations. Paxos has been working hard to building an infrastructure that can support banks like this. And I got to say, Kyle, I got to give my kudos to Bank of America.
Absolutely.
Because that's a huge, huge move that many, many banks are going to start following. We already saw Fidelity last week announced that their lending securities business is going to be, digitally powered. But this is using Paxos for blockchain settlement and managing the securities on the Bank of America platform.
So exciting.
The 3rd largest bank in the world. Huge, huge news. Great pick, Kyle.
Absolutely. Congrats to Paxos. And how about you, Herwig? Take it away.
I'm delighted to give my company of the week out to somebody that I think both of us maybe have also awarded the company in the past. And that is none other than Figure/Provenance. Provenance is their blockchain protocol. Figure is the actual fintech business on top of it. And for those of you who are not familiar with Figure, it actually was started by a familiar name, Mike Cagney. If you don't know the name, you might know him from SoFi, Social Finance, which actually is now a public company, ended up raising hundreds of millions in VC dollars, I believe, and actually disrupted the student loan game forever. Now he's at it again with Figure, where he actually ended up raising over $200 million in venture as well, and actually $1 billion loan, which I think was from Jefferies, to go ahead and power HELOCs, home equity lines of credit, on the blockchain, on his Provenance blockchain. And since then, they've been developing and expanding on their technology to the point where I am now happy to award them Company of the Week, Kyle, because they have recently been awarded by FINRA a broker-dealer license with an alternative trading system, an ATS, that essentially enables them to start doing secondary trading of the securities that they've issued in the past. In fact, Mike Cagney said that over $3 billion worth of trades have already occurred through the platform, and now it looks like they can open this up to everybody. And I'm not just talking about for their own products or services, but I believe they're starting to go ahead and attract other issuers and customers to their platform. And to top it all off, Kyle, they just raised another $200 million. So This makes it the most funded security token company in the entire industry, and clearly one of the ones to watch.
Yeah, this is absolutely exciting. Figure has really built the whole ecosystem here with their blockchain, now with an ATS to be able to provide that broker-dealer services as well as potentially secondary market services as well once those offerings get there, potentially even selling some of these asset-backed securities through this loan portfolio of HELOCs that they've developed, maybe selling some of those to the retail public. We've only ever seen them do that from a private institutional side. Maybe they open some of these things up to the public. Very exciting. Easy choice there, bro.
Big two companies of the week. Congratulations, Paxos. Congratulations, Figure Securities, which is what their ATS license is under. And with that, Kyle, let's get to the top 5.
And moving into our top 5 segment, we've got article number 1. And this comes from T0. We've got a couple important pieces of news coming from T0, and we wanted to rapid fire them for you because you just couldn't miss it. Starting it off is the fact that they're going to be listing the Liquid Mining Fund, the second one, on their marketplace platform. This is a fund launched by Aurelio, this week's sponsor. And Liquid Mining Fund essentially is a fund that funds Bitcoin mining operations to generate returns on it. They launched the first fund about $1 million and returned 50% back to LPs. They're now raising $15 million to do the exact same thing, and now it's going to be listed on T0. On top of that, T0 continued with some great news from their earnings call last week. Fortunately, they invited me on there to speak on their Q&A, and they said they're going to be listing 3 to 6 additional assets in the next 3 to 6 months, hopefully. I mean, they've been saying that for a little while, but it's great news that they're really paying a lot of attention towards driving more adoption to that. And then the final bombshell that they dropped, Herwig, was that they are potentially going to be SPACing T0. This is some crazy news. They're fundraising right now, and on top of that, they've explored restructuring the T0 token to provide additional added value to shareholders. So there's a ton of news coming out of T0. They're still working really hard. Don't think that they've just fallen by the wayside.
Huge moves. We know that Exodus and now Liquid Mining are likely 2 of those 6. We don't have much info on the other 4, but really great news to see more and more listings happening in the space, specifically on T0.
Absolutely.
Now, number 2, what you need to know is the NBA Top Shots platform has officially, finally, I think we all could probably expected it, been sued. So that's right, a class action lawsuit is claiming that NBA Top Shots moments, NFTs that you can purchase linking to digital moments from NBA games, are actually considered securities, and therefore Dapper Labs, the firm behind NBA Top Shots, not the NBA itself. In fact, the NBA was not at all tagged in the lawsuit whatsoever, just the technology provider Dapper for illegally not registering securities for these NFTs and obviously not complying with the according regulation. So that's a really big deal. This is exactly what happened back in 2017 when we saw the ICO phenomenon rise and quickly get shuttered by regulators for, in fact, doing the same exact thing. not registering securities despite that ICOs being qualified as such. And now NFTs may fall under the same regime. This is a big case because of the potential implications that are involved for other NFT issuers. In fact, we may already start to see more lawsuits fly simply just because we saw this one come out, even though it may or may not have any merit. What's certainly the case is it does look like it's going to be a serious one with many different case law attached to it beyond just ICOs. There's a great article that you can go check out in the resources from the podcast.
Absolutely. This is fascinating. And if you joined into our Clubhouse conversation, which we do on Thursdays at 5 p.m. through the Security Token Speakeasy channel, you would know that we actually discussed this in extensive detail with a couple securities lawyers who told us pretty much the same thing, that it is a little bit fishy that you're selling something and having that trading marketplace all on the same platform that tends to make it look like an investment, that you're selling some kind of investment contract. So we'll have to see. This is going to be, as you said, setting some real precedent moving forward.
What's even more interesting is this case is actually taking place in the New York state courts, not in the federal courts, which may mean something regarding case law and the regulation around New York and how that might affect this entire case. Meanwhile, Kyle, let's get into number 3, where actually we're talking about Realty and their newly planned governance token. Can you share a little bit more?
Yeah, so you may recognize the name Realty. They've got a ton of real estate properties that they've actually successfully tokenized. They sell each individual property, which then generates a return paid in the DAI stablecoin back to issuers, 10 to 12%, pretty exciting deals. They tend to sell out really quickly. They've done 94 to date. So this is no small issuer here.
11 million in 15 months.
Pretty crazy stuff. They're based out of Boca here in South Florida. And Realty has announced that they're actually going to be launching a governance token. They're launching a fully decentralized network here to potentially decide some of these governance pieces, maybe on the management side, maybe on the fee structure side. They haven't announced exactly how the structure is going to work, whether they're going to be launching a decentralized autonomous organization to make any choices, but they have announced that the SOON token, SOON token, is going to be coming soon via an airdrop to shareholders, and we're going to have to see what comes out from here.
Yeah, token holders will be potentially entitled to some SOON tokens, and those SOON tokens are expected to then one day be traded in for, of course, the actual governance token. I don't think they plan to stick to SOON as their official governance token there. So we don't have much more to share about the actual functionality, but if you are a Realty holder or even interested, there's potentially some extra bang for your buck now, as governance tokens are a planned thing.
Absolutely. What's number 4?
Number 4, we've got STOS. That's the Singapore Digital Assets Exchange merging with Minterest. So Minterest is actually sort of the issuance platform, and STOS is the actual marketplace. And together, they believe that they can team up and take over their jurisdiction. They actually have approval from the MAS, and actually to date, they've actually helped projects raise over $190 million. So now that the two can come together, they can offer both primary issuance as well as secondary trading under one single security token solution. And that's a big deal because we expect that to happen a lot more. It's a much faster way to market and to bring all the pieces together. We'll see how the merger ultimately goes through.
Singapore, yet again, just driving that adoption. They're on the cutting edge. Very exciting stuff. They want to build a full ecosystem here, from deal origination to fundraising to security issuance, as well as through the secondary trading. So they're really trying to cover the whole map here, bring issuers through the ecosystem, and make it as simple as possible for an analog issuer to bring these tokens to market.
Powerful value proposition for anyone considering security tokens. And now let's get to number 5, eBay, which is actually also getting into the NFT game. And that's the big news. You'll soon be able to, at least trusted sellers, be able to leverage the eBay platform to start getting into NFTs. And as some of the executives at eBay said, they're always on the forefront. When a new trend happens, it somehow pops up on eBay for purchase. And so they see nothing different with NFTs here.
So I feel like they missed the opportunity here to launch NFT Bay. Like that's kind of the, but yeah, so they're going to be launching NFTs. Anybody, will be able to buy and sell through there. Will they provide a competitive platform to OpenSea or Rarible or some of these other platforms that are already those marketplaces established in the NFT space? They also are exploring accepting cryptocurrency as payment through their platform.
Big deal.
So it's a very big deal, especially if you could use stablecoin. I think that's really the biggest draw for a lot of people right now, is potentially using stablecoins to pay for things. And if that becomes a possibility, now it starts to get interesting.
I think the key question that's on top of maybe all of our minds is how much will this NBA Top Shot lawsuit potentially slow down the launch of such a platform with eBay, only time will tell.
And with that, we're going to translate and move right into your industry news segment.
Let's do it. And in this week's industry news, I need to start off by first acknowledging China's ban on cryptocurrency and Bitcoin specifically. We saw China announce further crackdowns on crypto, which is likely partially responsible for a widespread correction in the crypto markets recently. It's really simple, folks. Transacting Bitcoin or other crypto assets is illegal in the country, and that's a big deal as China continues to push its own central bank digital currency onto its citizens. And as for security token news, we saw one of Singapore's leading securities marketplaces, iStocks, rebrand to ADDX. So they promise nothing is changing except a new look and a new optimized platform. But I have to say, I'm a little confused as to what ADDX stands for. The rebrand announcement didn't actually clarify this, so we will just have to guess for now. And over in the US, we saw T0 and Box Group. They've been attempting to get a national exchange approved by the SEC. And this is not a broker-dealer like T0 or other platforms. Currently, there are no blockchain-based exchanges in the United States. This joint venture looks to change that. The Boston Security Token Exchange, which is what it's called, has been repeatedly denied in the past, and it looks like the trend may continue this year as the SEC has once again requested more feedback on the exchange platform. Box more recently filed an amendment to one of its proposals, increasing the number of market makers and heightening its listing standards, all in an effort to win the appeal of the regulators. Now they have extended their deadline to make a decision, which doesn't actually make it much of a deadline, does it? Now, in any event, the national exchange BSTX hasn't been shuttered yet and may even soon see an approval in the next few months or at least another update. And speaking of T0, the company made an announcement that they have partnered up with 3 different platforms to bring in more private companies for listing. So the firms are Omni Valley, Trellis, and Wonderfund, which all have investor networks and issuer funding solutions. So they seem like a natural fit, and T0 is hard at work as always on those partnerships. And Philippines-based CryptoSX, Digital Asset Exchange, and Swiss-based Coverio jointly announced a collaboration to develop digital asset management services that also includes STOs, digital asset trading, and digital wealth management, leveraging the Coverio Prime brokerage in Switzerland and CryptoSX's blockchain-based exchange. CryptoSX actually has completed 4 STO listings to professional and accredited investors over the last year. They've been covering rare Scottish single malt cask investment fund, copper mining in Peru, and biotech agricultural deals in Cambodia. And they actually expect to list another 10 STOs in 2021, including resort properties, commercial real estate, agritech, energy, precious metals, and more from all around the world. The market is about to really heat up, folks, if that's the case. That's a great partnership, I think. The security token issuance platform Polymath, which recently has been adding node operators on their new Polymesh blockchain. And for those of you who don't know, that's actually a purpose-built blockchain protocol for digital securities built by Polymath. And they actually require node operators to validate the data on the blockchain. And recently they added in Toro Capital, and now they've announced that both Tokenized and Saxon Advisor are also node operators. One can only assume that they will likely encourage their clients to leverage the Polymesh blockchain in the future, which is currently in testnet. And the last company announcement that I have for you is from Stratus. That's the 140th largest blockchain protocol, which is now planning to launch the GBBT stablecoin, aka the digital British pound, folks. Most of the attention in the world has always been on the US dollar stablecoin, and that might be because it is the reserve currency of the world. But I applaud this move by Stratus because stablecoins are key pieces of infrastructure for security token ecosystems. And now more UK projects may want to leverage security tokens and pay their investors in the GBBT coin by Stratus. Perhaps this move may even skyrocket them into the first page of CoinMarketCap. And I have some great resource articles for all of you to check out from last week too. The first is covering security tokens and crypto fundraising in Malaysia. Lexology provides a fantastic overview of the regulation there by Kai Ling Yao Chambers attorneys. And we, of course, have another edition of Tokenize This by Security Token Advisor's very own Peter Gaffney. And this week, he covers the metaverse, the virtual world, and the tokenization applications there. Projects like Decentraland create new opportunities for developers and investors, and NFTs have given a surge of new platforms hope. for virtual tokenization. Give it a read on the Security Token Market blog if you're interested. And if you like the idea of digital British pound or stablecoins in general, you might be interested in central bank digital currencies or CBDCs. We have a running list on our blog, but Fitch Ratings recently came out with a great article covering how they actually disrupt financial systems. And have you ever wondered also, by the way, how Coinbase, Kraken, and others decide which cryptos are securities? Colin Post on the block gives a great overview of the Crypto Ratings Council and how it works in choosing what's a security. Finally, Cointelegraph's Osato Avan Nomayo gave a fantastic overview of the 200 trillion global market opportunity for what he calls token IPOs, aka security tokens. From interviews with Societe Generale's Forge division to STO highlights from around the world, this article breaks down why security tokens are definitely the future. And that's it for the news. Maybe I'll catch you at Polymath's Security Token Custody webinar featuring executives from on-chain custodians, Bloxon, and Digivault. That's on Tuesday, May 25th at 9 a.m. Or maybe I'll catch you at Miami June's Bitcoin conference. Give us a shout on Twitter or LinkedIn if you plan to visit. Otherwise, we hope to catch you at our weekly Clubhouse session at 5 p.m. on Thursdays, where we discuss the show with other guest panelists from the industry. And that's it from the news. Seriously, I don't think we missed a beat on all things security tokens this week. So let's head over to Kyle and get the latest security token and secondary market updates.
Thanks, Herwig. Moving into our security token offering segment, I'm kicking it off this week with an update from the Fair Islands Distillery that we covered a few weeks ago. Now, as a reminder, the Fair Islands Distillery is a whiskey distillery in the remote Faroe Islands that is selling equity in the business. They've already raised close to $1 million from more than 500 new shareholders that they've signed up within 2 weeks and are now opening the rest of the round to new investors. Our update comes from their partnership with DigiShares, which will see 300,000 Class B shares issued, representing 23% of the company. At a sale price of 14 euros, the hard cap will be just over 4 million at a valuation of $18 million. The STO began in February and will run until the 31st of July 2021, so check this one out if you're interested in participating. We have another update from Brox Equity, the Canadian firm selling shares in a Bitcoin mining operation. The Brox security token represents equity in the business as well as the dividends from the mining revenues. The firm confirmed in a press release that the token will be issued on the Permachain platform. The Brox token will represent the company's Class B common shares as well and are being deployed as an ERC20 token via smart contracts on Ethereum's blockchain with coded restrictions to comply with Canadian exempt securities laws. What's fascinating about the financial structure established by Brox here is that the company expects to list its certified Class A common shares on a regulated Canadian exchange. And because the Class A shares and the Class B shares are interchangeable on a one-to-one basis, shareholders will be able to get liquidity through the traditional market while also having an opportunity to move between that traditional market and the digital asset markets at will. The offering is expected to start in mid-May and is being distributed as an exempt offering by the Windermere Capital in certain Canadian jurisdictions and by Ento Capital in the Dubai International Financial Center. And the final piece of security token offering news is a new security token offering coming from Africa. The D-Afri Exchange is a platform looking to launch a cryptocurrency exchange to service African investors. The firm is looking to raise up to $10 million via a security token offering in exchange for equity in the company. It'll be issued on the Ethereum blockchain, and the minimum investment is currently $70. The firm is striving to drive adoption of the cryptocurrency industry by increasing access to one of the most in-demand assets. So to find out more, you can go to dafriexchange.com. And moving into our market trading segment, we had a tough week in the security token industry, but we'll at least start out with some good news. And that is that we've added the Relio security token offering to the trading market. So let's break down some of the opening stats on the token. It's currently trading at around $2.50. Ticker there is RST, and the token, as we've talked about many times, represents equity and future revenues of the security token of the business Relio. The token narrowly breaks into the top 10 with a market cap of about $9 million, placing it just under Curzio Research and Spice VC. However, the good news kind of stops there. as the rest of the market was in the red following what was a devastating week in the entire crypto ecosystem. The market was down about 10%, which is maybe better than the rest, led by Overstock, T0, and Blockchain Capital, all finishing in the red. BCAP was the biggest loser, down 27% from its former high of $19 down to $13.90. It doesn't seem really like it was predicated on the bad news though, because open finance is pretty much fully illiquid at this point, and I think that the huge price decline was actually just slippage from literally just one $8,000 trade. And that was about it from the security token side, but there's also been some activity on the tokenized stock front that really caught my attention. If you remember, FTX and Binance have been trading tokenized derivatives of publicly traded stocks like Tesla, Apple, and dozens of other ones. And they've been fascinating to watch because the trading volumes are actually significantly higher than what we've currently seen so far in the security token industry, and from crypto investors nonetheless. The asset class, while attracting quite a bit of regulatory scrutiny that we've covered on the show before, due to a high potential of gray area here in how they're being sold, they're actually proving to be a pretty great way to attract new investors into the security token or asset-backed industry. What's surprising about the tokenized stock market this week is that while we're used to seeing familiar faces at the top of the charts like Tesla, Coinbase, GameStop, and Apple, there is one that stands above the rest, doing nearly double the weekly trading volume than second place. Can you guess which one it is? Would you have guessed Grayscale's Bitcoin Investment Trust? Probably not. And I'm going to try to dig into into those dynamics to figure out if I can get a better understanding of why anybody would want to invest in a tokenized derivative of a public trust holding 100% Bitcoin when they could just buy Bitcoin from the exact same platform itself. But the idea that I have going so far is that actually maybe the volume represents short interest in Bitcoin by traders that are looking to capitalize on the discount applied to Grayscale shares relative to the underlying asset value of the portfolio. If you don't understand that idea, let me break it down a little bit more clearly. Essentially, traders can enact what's called a basis trade, where they short Bitcoin and purchase the underlying shares of Grayscale's Bitcoin Trust. Grayscale's Bitcoin Trust, by the way, trading at 15 to 20% discount to the price of Bitcoin. So in this way, you can take a share of Bitcoin, sell it, and then repurchase the same amount of shares of GBTC to cover your exposure, but then you'd end up with that extra cash from the discount applied to the GBTC shares. Essentially, this can be a form of arbitrage against the price of Bitcoin, and potentially for this reason, along with many other explanations, Grayscale has done over $10 million in trading volume in just the last week, which is double what second place Tesla has done in the same time frame. So yet another exciting week in the markets. You need to do your own research and hit me up on Twitter, send me all your hot takes, give me the other reasons why we might be seeing Grayscale leading the charts for yet another consecutive week. And with that, let's head to our main topic. And moving into our main topic this week, we're going to be covering blockchain-powered securitization, really the underpinning of the security token and of why the blockchain industry is transforming capital markets and its implications moving forward. I can't wait to dive into this one today.
Let's do it. Let's jump right into it. Securitization, that's a big word. We can throw a lot of securities around. Securities, security, securitization. What does it mean? Well, let's talk a little bit first before we talk about blockchain-powered securitization. What is it traditionally? Well, for the last couple of decades, it's actually become a recent sort of pattern and trend for people to be able to unlock liquidity and more capabilities for their assets or underlying loans or different securities, really anything. It's the concept of securitizing or turning something into an investment product that we're really talking about. And the way that you do that is you actually set up what's known as a special purpose vehicle, an SPV, which usually is an LLC or some kind of registered entity somewhere, and it has no business other than to manage that single or multiple portfolio of assets. And in this case, let's say we take a house. We would take our house, to take the deed, and we'd put it into our SPV, and now we could tokenize the shares in order to create liquidity as opposed to just making it easier to access the entity itself, which was already a game changer for the financial industry, just to be able to leverage that. But of course, with security tokens, Kyle, we can do a whole lot more, can't we?
So we're talking about blockchain-powered securitization here. So I think that's a great rundown of what securitization is. We're talking about just creating a little shell company that owns the underlying asset, and by having a business interest, we can much more effectively sell these shares because we have a very established business transfer opportunity here in capital market structure. But with the blockchain, we can leverage a whole lot more and improve that process because traditional securitization is pretty manual. You've got a lot of intermediaries, a lot of players in between that need to kind of hand this thing off from one person to another to give their stamp of approval. And of course, each one of those stamps of approval takes a little cut of the fee. So when we're talking about blockchain-powered securitization, one of the main value propositions here is leveraging smart contracts. We've covered smart contracts on the show before, but essentially what a smart contract is it's just automation. You're writing code that is an if-then statement that you can make really complex. So you can say, if we need to do something, then automatically execute it. And so as long as we can be sure that the if statement is true and is valid, then we can be sure that the then is going to occur, right? So what the power of blockchain technology is really building that information fidelity. We know who the person is, so we can automate all of their compliance all the way through this process. We can track the person or the owner or the underlying asset through all the different phases of the securitization process, from origination, working with a firm that's actually going to build this thing, to actually selling the product, to maybe listing it on the secondary markets. We can track that process seamlessly and automatically update that information. And this is super important because we don't need those middlemen, as I said, to hand off from each person and each firm to the next, which not only speeds up the process because we don't need to have each person, responsible for actually managing this thing. We can do it instantaneously. But on top of that, it makes it so much cheaper because these smart contracts don't need to take a fee, or certainly take a much, much smaller fee because they're not really doing anything. You can do it over and over and
over. Absolutely correct. If you remember, actually, my company of the week from earlier this episode, Figure Securities, they had started off by launching a HELOC platform, home equity lines of credit. The difference being that they wanted to leverage smart contracts in the blockchain to make those efficiencies come through. Well, according to Mike Canyon, CEO, he has said to date that sometimes between 300 to 600, that's 3 to 6% in cost savings can be applied by doing this all natively digitally. And when we're talking about hundreds of millions of dollars worth of securitizations, we're talking about millions of dollars in savings, enough for anyone to perk up and say, hello, let's take a look at this. And so that's what started to happen. In fact, he did the largest securitization to date since the 2008 crisis of these HELOCs and through an entire blockchain-based procedure. The only difference being that there is no LP or limited partner or investor token representing that securitization. For us, it goes the full way, where we have the underlying portfolio or underlying asset tokenized. We have a wallet solution as a middleman, as an asset management layer, leveraging smart contracts and managing the portfolio. And then we have a security token sitting on top, acting as an exposure, as an investment access to the actual underlying asset. And in this case, we saw back in the 2008 crisis, totally huge problems happen with securitization, right? So many of you may be freaking out, but fear not, actually. I like to argue that if we had blockchain technology around today, we would have never had or suffered from an 2008 crisis. And let me walk you through why. What happened most typically was that investment banks would go ahead and buy securitization pools of various different real estate loans, and they would buy it from Kyle, who's got a very good trusted reputation from Deutsche Bank or whoever, and say, you know what, I'll buy this from you, and I'm gonna try to sell it to my clients. But before we do, maybe we'll go ahead and take out some of these kind of good loans, maybe package it up into another portfolio now that I own it, and we'll take some of these kind of worse loans and put it into the old package, and we'll just resell it to somebody else who trusts us and isn't gonna take the time to go through tens of thousands of documents to show you what kind of loans, what's their credit rating, what's the delinquency, all of this stuff that needs to be manually checked with human labor, right? Human capital to make this happen. Of course, if everything were to be natively digital, we would have a wallet that shows us all of the loans and programmatically be able to know what's the risk rating, what are the red flags, what's the real-time portfolio value, what's the real-time delinquency rate, and things like that to have investors have better comfort in how to manage that. Not to mention that if I, as the asset manager, decided to go ahead and move some of the underlying portfolio out, you would know it instantly, it would be recorded permanently on the blockchain, and no one would ever be able to say otherwise. And for these reasons, I believe that if blockchain-powered securitization were around back in the 2000s, we actually probably would have been able to prevent a lot of these issues because it would have been easier for people to say, you know what, something's fishy here, something's wrong, or at least easier for them to do the due diligence.
Absolutely right. It's fascinating stuff here. And then even on top of that, as we like to talk about, security tokens and blockchain empower and enable global financial markets. And so with blockchain powering the securitization, we can standardize all of those pieces, the financial pieces, the compliance pieces around the world, so that any jurisdiction follows those same rules. And once we can establish that kind of global agreement of what those rules are, there's no reason that we couldn't be trading between banks around the world, between investors around the world, between funds around the world, which just increases the capital stack. It's going to bring in huge injections of capital. This is building a global financial market, which is likely more diversified and you could argue much more stable because of that opportunity and because you're diversifying the risk across assets around the world. And it just increases the credit pool of everything here. So this is a fantastic opportunity to really establish the trust that we need in order to allow that access to happen. We start with blockchain and we go around the world.
There's so many other cool things that you can end up doing with blockchain-powered securitization. I think we're just scratching the surface, honestly. But I think the main takeaway is this is one of those mega trends which is enabling security tokens to be, right? This is the capability of taking a traditional underlying asset or loan or security, packaging it up, and now tokenizing it. So to your point, anyone around the world can start to access it and create potential liquidity for what is typically a very difficult asset or security or loan to sell.
So I hope you followed along with this one. It was definitely a little bit more technical. A lot of this stuff ends up happening on the back end. A lot of this stuff banks will have to worry about. The average retail buyer or seller won't really notice a whole lot of a difference aside from potentially lower fees or more opportunities to invest in things. But it's a huge, crucial, important part of upgrading our financial markets. And we're here to answer any questions. If you want to follow up, if you want to hear more, reach out to either one of us on LinkedIn or Twitter. You can also join the Clubhouse session and join the Q&A that we host every Thursday at 5 p.m. or follow any of other information and to learn a little bit more.
Absolutely. I highly recommend subscribing to our What's Drippin' newsletter. You can do that right at stomarket.com. Or also go there to check out the latest trading information, the latest news, and everything all else security tokens. And with that, thanks for listening and happy tokenizing.
Talk to you next week.